Are you ready to learn about what you need to look out for when buying real estate in recession? Then guess what? This video is perfect for you. After watching this video, you're going to learn about 5 different things that's going to get you to be set up on the correct path on purchasing a property during this upcoming recession. And it's all going to begin right after this. Hi everyone, I'm Josh Tavares, investor and realtor. eXp Realty Brokerage. It'd be so great if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you're looking to invest in the US at a low price point, great cash flow, high appreciation, click the link below, let's book a call, and let's partner together. Without further ado, let's get started. Now is a fantastic time to begin investing in real estate or to get into real estate based on prices dropping at this current time and other factors that are actually working in our favor, such as higher interest rates, high migration rates taking place, high rents taking place, and just all these factors and then some that are really helping out investors to get real estate at a cheaper price point, that when things get better, it'll help elevate appreciation of a lot of these properties, help us build more wealth, equity that we can use to scale forward. And it's really funny because a lot of investors are missing on this opportunity because this is probably one of the lower price points that you're going to see for a little bit, because I really foresee in the next few years property prices going back to where they were earlier this year, if not even higher. So now's the time to exploit that opportunity. Use it to help build and grow your portfolio during this time. Number one, you've got to do your research. You got to do research on the type of property you're looking for. Do your research on the segmentation of the tenant personnel that you're looking for. You also need to understand to do your research on the area and know certain key factors. It's very important for you to understand the economic fundamentals, what's happening in that area. You want to know, is that area creating jobs? Is there good migration taking place? Are property values slowly increasing, or at least rents slowly increasing? Is there a demand for housing? And is it a high enough demand to make sense to invest in those areas, right? Are there amenities in these areas? Is there transit improvements taking place? Or the areas we're looking to invest into, are there transit opportunities such as public transit, highway, and any type of other transit means? Doing these types of research is going to be really, really important in terms of knowing the right area, where you're investing, knowing your tenant clientele. So when you're ready to put your boots to the ground, start looking for properties, start building your team, and start investing in these communities, you'll know it so well that you will actually be in a great circumstance that once things begin to recover and the recession is over, you will see a high volume of property price values as well as rents take place in your property. And during this time doing your research, it's even more important to do your due diligence and understand the numbers. Like I had said in prior videos, it's really important, especially more now than ever, to understand cash flow. So doing your research and making sure the property's cash flow and that everything makes sense is super important, beneficial for you as an investor as well. Number 2, this is a super important one that novice investors don't take serious, and it's getting your ducks lined up. Now, I don't really mean physical ducks. Essentially what I'm meaning is that having your finances set up prior to purchasing property. So you want to be pre-qualified, you want to be able to be pre-positioned so that when a property comes on, you know exactly what you're looking for, what you can afford, you've got the funds ready to go in your bank account. So when you're ready to take an action to purchasing a property, put in the funds, everything is in the correct manner to do so. You need to have funds on standby that you can use for a deposit as well as a down payment, especially for quick closings. We're heading in a time now where some people are going to want to close really quickly because of financial circumstances that has not worked out in their favor. So you want to have everything lined, having funds fully and ready to go. You have to get pre-positioned. So at this point, if someone wants to close in 3 weeks, you can get the deal done, get it closed, and own that property in a short time frame. And with this in mind, you'll be able to obtain the home sooner, you'll be able to do renovations sooner, which you can begin to rent it much sooner to great quality tenants. I'm telling you, this is something that many investors overlook and they don't get themselves prepared correctly. We've worked with different buyers who've done similar things where they said they're looking for properties that are worth $1 million when their income could only qualify, for a combined total mortgage of maybe $200,000. Well, then we need to ask the question, where are the additional $800,000 in funds going to come from, right? So it's very important to have everything fully aligned, because let's just say a great property hits the market, you want to be in the great position that you can be in that position, that you can bid, you can get that property, Because remember, there's going to be other investors looking for these type of deals too. It's not just going to be yourself. So you want to be able to have everything ready to go. You know exactly your ceiling of what you can afford, right? So that way, in the event that, let's just say, the funds goes above what you're able to qualify for, you're able to say, you know what, I'm not able to go that far, let it be. And you'll be in a good position that you'll be able to win, because there's many times investors who are novice, they'll go get their offer accepted. However, come conditional period, they're not able to qualify financially, and then they back out of the deal. And then yourself, being a smart investor, having everything lined up, you know exactly that you can qualify for this property, you're able to snatch it under their feet because they weren't able to have their ducks in a row. Number 3, this is another big one that some investors overlook, and make sure you have to have the right team members working for you, and make sure the title is clear on the property. I've heard stories of people working with cross-border specialists or even lawyers, real estate lawyers, who didn't do their due diligence and check the full title and make sure it was clear and make sure everything was charged accordingly, or make sure that there were any incurrences that took place, like some sort of a lien, and make sure it was completely removed. Because remember, if you're an investor who's going to purchase a rental property and it has some sort of a lien on it, whether it be from a contractor, a lending institution of some sort, remember, as soon as you purchase that property and if the title is not clear, guess what? You're going to be the one making those payments. Or anything else associated with that property, like let's just say you purchased the property and you were hoping to have the whole lot to yourself, and you thought it'd be a great opportunity for you to build a garage or a second dwelling on site. And then you found out that your neighbor actually has access to the portion that you are going to build on. That's an issue. You want to make sure you have access to the full property that you're looking to purchase, and that's why you need to have a really good real estate legal team. I've heard of stories of investors going about looking for a property, thinking they found this golden gem, but then to later find out that they're sharing a part of their lot with someone else, and that they can't make those improvements, that if they were going to, they would actually have to go to the city and have, of course, the other owner of the property agree to it, pay them out, also pay to have it resevered. To have them own that property costs so much money, so much legal problems, in which, had everything been done correctly, this wouldn't really necessarily be an issue. And going about finding a property that's not going to have any issues tied to it. And that's why it's really important that multiple dwelling zoning is acquired when it comes to purchasing these properties. You take that into consideration. When you're investing into an area, you need to go and find a zoning bylaw map they have online, download it, and understand the areas where they will allow multiple units if that's what you're going about doing. If you're going to do single family homes, then it's not going to be an issue. But if you're looking to invest into having duplexes, triplexes, and so on and so forth, or doing conversions, you want to know the areas and the properties that allow you to do so. As an example, let's say you purchase a home that's essentially a single family dwelling residential zoning. You're not allowed typically to have any additional dwelling. Well, let's just say you purchased it and it actually had a basement unit that somebody was renting. If the city comes and knocks on your door, they'll essentially come and say, hey, someone needs to be removed, or you'll receive a massive fine and we'll have to throw them out, because this home only allows for one dwelling, not for multiple. Now, if you're in a better predicament, if you purchase a property that might not be, let's say, legal, but let's say it has 2 dwellings, but it allows for the zoning, that's a much better circumstance, because you already have the zoning that you could always just convert, to make it legal, versus not having the zoning, having it illegal, and having the city pretty much remove the tenant and reduce the income source that you were receiving. Now, you can, in many cases, work with the city and try to have amendments where your property can actually be changed, but there are many different factors involved. And if people in the community actually go against it because it impacts them in ways, then it's going to be really challenging. So that's why it's really important that wherever you're going to invest, you need to know the areas, the pockets that are going to allow for the type of investments that you're looking to get into. Number 4, this is an important one that many novice investors get into, is avoid bidding wars. Now, let's say you found that perfect property, makes the most amount of sense, and this is going to be the most profitable for your real estate portfolio. Guess what? It's probably going to be profitable for someone else. You don't want to go about the route of bidding wars, because you're going to pay a lot more for a property that's out of your scope. If the property is only worth a certain amount and you can only afford so much, it's not worth going above and beyond. You have a scope, you need to stay within that. And let's say the property is actually worth about, let's say, $450,000. but there's another investor who keeps overbidding and bringing it up even higher. Remember, if the home is becoming overvalued, it may be really hard to receive that lending because you still have to have some sort of an appraisal on the property. So there's a possibility that the bank could actually say no to the loan or say, you know what, we're only going to allow for this much. So you need to come up with the additional $50,000 because the home isn't worth $500,000. The home is worth $450,000. The fact that you went to go and have a bidding war with another investor is really on you. You need to find a way to find those funds because we're not going to grant that to you. Essentially, you're going to be overpaying in a circumstance where the bank may not be able to give you additional funds on that property because the bank wants to give you money on what the property is actually valued. They're not going to give you, the loan for a property that's going to be worth substantially more. They're only going to give you the loan of really what it's worth and essentially what you can qualify for. So that's something to keep in mind when going about looking for properties. You don't want to go into bidding wars. If it gets down that route, cut ties and get out. Which sets us up for our last one, which is knowing when to walk away. Now, I know we've all seen properties before that have seemed perfect in terms of their layout, their size, their lot size, their finish, or the possibility in terms of renovating it through cosmetic upgrades. But the price point may be too high, or like we had said before, there are investors that are willing to pay much more than really what it's worth. You gotta know when to walk away. You have a parameter of what you can afford and what you're looking for, stick with it. If you don't find it now, you will find it later. Continue to search. The market is always changing. If the property you're looking for is not available now, it will be available at some point. Just keep looking, keep working with your team, and go about it, and stay within your lines. You want to stay rigid with this because you don't want to be in a circumstance where you purchase a property that doesn't actually make sense, but based on emotions, you made the actions to try to make it work, even though number-wise, it doesn't make sense and it's actually not a good fit based on the segmentation of clients you're looking to acquire. Now, let's just say you found a duplex that has, a one-bedroom unit up top and it's got a two-bedroom in the bottom, and you're hoping that it's going to generate $3,000 in rental income, but combined everything together based on market rents, it's really going to be about like $2,500. Well, you're short about $500. So you need to know when to walk away, know your research, and say, hey, this property is not going to make sense what I'm looking for. I'm just going to keep on looking until I find it. And if I got to use other creative strategies, go door knocking, if I got to send out flyers, if I got to reach out to wholesalers or other, then so be it. We'll have a property in mind, understand the segment of tenants we're going to be renting to, and make the right move, and don't get into anything that's not going to make sense for our portfolio. Many times there's investors who get into real estate investing without cash flowing, without having the property make complete sense for them, just out of emotion because another investor they heard added to their portfolio, so they wanted to go make this move. And then they're going to regret it later with all these costs and tenant issues and everything as such. We don't want to be in that circumstance because it can really, really hinder us down the road in so many different ways. I hope that video was super helpful and insightful, gives you all the information that you need to know when purchasing a home during a recession. I'm Josh Tavares, investor and realtor with the eXp Realty Brokerage. Once again, it'd be amazing if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you're looking to invest in real estate at a low price point, great cash flow, great appreciation, and no involvement, guess what? Click the link below, let's book a call, and let's partner together. Thanks so much for watching. See you next time.